Assalamualaikum and greeting. Today we're going to look at another topic of FAR 570, that is financial instrument. Okay, for topic financial instrument, there are 3 MFRS that you can refer. Okay, MFRS 9 financial instrument, MFRS 132 financial instrument presentation, MFRS 7 financial instrument disclosure. Previously, okay, we have MFRS 139, but that MFRS has been replaced by MFRS 9. Basically, financial instrument is something that you have been accounted before. If you look at the example of financial instrument provided, among the example is cash, account receivable, account payable, loan receivable, and loan payable. So previously, you already accounted this item. However, you may not being introduced to this item in accordance to MFRS. Okay, so now we're going to look at a more standardized understanding, okay, of financial instrument based on the stated MFRS. Okay, so financial instrument can be classified as primary instrument and also derivative. Okay, the term financial instrument include a wide range of instruments which include asset, liability, and equity. Okay, among the common example of financial instrument, we have cash, demand and time deposit, commercial paper. Okay, we have account receivable, we have account payable, loan receivable, loan payable, debt and equity. Okay, that is a group of primary instrument. We also have warrant, right future contract among the example for derivative. In order for you to identify the existence of financial instrument, you must check whether it's made this definition. Okay, a financial instrument is defined as any contract that give rise to a financial asset of one entity and a financial liability or equity instrument of another entity. Okay, financial instrument can be classified into financial asset, financial liability, and also equity. Okay, so in order for you to identify where the existence of financial instrument, you check first, is there any contract? Okay, in order for you to identify that, let's look at what is meant by contract. Contract is an agreement between two or more parties that have clear economic consequences, that the parties have little, if any, discretion to avoid, usually because the agreement is enforceable by law. Okay, so this agreement, when we talk about contract, it involves an agreement that are bound by the law, which mean that bukan kata kita janji saja. Janji tersebut diikat dengan undang-undang or it enforceable by law. Okay. So when you have existence of contract, then you check whether this contract give rise to financial asset, okay, of one entity and financial liability or equity instrument of another entity. Okay, let us look at example 1.1a. On 1st January 2007, FLB, which is the buyer, ordered goods for sale amounted to 100 million from FLB, the seller. The goods were delivered and received by FLB 1 month later on 1st February. This amount is to be settled 2 months later on 1st April. The issue arises here is there a contract between the buyer and seller? So based on example 1.1a, we can say that yes, there is a contract between the two companies. However, the contract entered on 1st January does not create a financial instrument because settlement is not a financial asset. Okay, the contract only agrees on FLB is to receive and FAB have the obligation to deliver. Okay, let's look at another scenario in example 1.1b. Okay, assume on 1st February, FLB contractually agree with FAB to settle the amount based on the method below. For each of the method, discuss whether there is a financial instrument. Okay, settlement 1 is to settle by cash. Settlement 2 to settle by a trade receivable, where FLB has the right to receive cash from the trade receivable. Okay, settlement 3 settle by ordinary share of BT Sendirian Berhad and investment owned by FLB. Okay, 4 settled by a piece of land owned by FLB. The last one is settled by issue of FLB owned equity shares to FAB. For settlement number 1, settled by cash. Okay, from example 1.1 is clearly stated there is a contractually agreement. So the contract is already exists. Now we're going to look at whether it gives rise to financial asset or financial liability. So if they agree to settle by cash, this can be considered as financial instrument because FLB has a contractual obligation to deliver cash, okay, and FLB have the right to receive cash. Okay, sebab dia dah agree, dah janji to bayar, to pay with cash. So dia kena bayar cash dan FAB ada hak untuk terima cash. Okay, for settlement number 2, settled by a trade receivable where FLB has the right to receive cash from the trade receivable. So in here, instead of giving or instead of paying with cash, what the buyer did is the buyer give its trade receivable. Okay, trade receivable ada orang berhutang dengan dia, so dia bagi trade receivable tu kepada seller. So what happens? Seller akan collect lah daripada trade receivable tu. Okay, settled by trade receivable where FLP, okay, the buyer has the right to receive cash from the trade receivable. So this is considered as a financial instrument also because FLB has a contractual obligation to deliver another financial asset. So what is that another financial asset? That is trade receivable. Okay, and FAB has the right to receive another financial asset from another entity. Maknanya dia dah kena serah lah trade receivable tu. Okay, so that's why we consider it as a financial instrument. Okay, settlement number 3, settled by ordinary share of BTSB and investment owned by FLB. This is considered as a financial instrument also. Why? Because satu, dia ada contractual obligation to do what? To deliver the equity instrument. Where is the equity instrument? Saham tu lah. Saham of BT Sendirian Berhad. Maknanya the buyer beli saham in BT Sendirian Berhad and dia akan gunakan this ordinary share untuk bayar hutang dia kepada seller. Okay, so they already agree on that. Then seller FLB kena bagilah ordinary share of BT Sendirian Berhad tu pada masa yang sama FAB berhak to receive that. Maknanya kalau dia tak terima the financial instrument, dia tak terima ordinary share of BT Sendirian Berhad, then dia boleh sue lah ataupun claim. Okay. For settlement number 4, settled by piece of land owned by FLB. Okay, so in this case, it's not a financial instrument. Okay, why? Because even though there is an obligation, there is a contract, but the contract involves a payment with non-financial asset. Okay, we already agree land is not a financial asset. Okay. So in that case, it does not give rise to a financial asset because land is property, plant and equipment. Okay, lastly, settlement by issue of FLB own equity shares for FAB. Okay, this is a financial instrument, okay, and also fall into the scope of MFRS share-based payment. Okay, because FLB own equity share are used to pay for the goods acquired. Okay, so when financial instrument is recognized in FLB, okay, in the buyer is considered to be a financial liability sebab buyer dah berjanji nak bayar. So in buyer account is recorded as liability, whereas in seller it is recorded as financial asset because seller akan terima financial instrument sebagai part of settlement. So in here, in order for you to decide the existence of financial instrument, you need to know what is the example of financial instrument. Kalau dalam agreement tu transaction dia, settlement dia nak akan guna this, for example cash ke, trade receivable ke, equity ke, there is a chances where you going to give rise to financial instrument.